Welcome, 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 welcome. Okay, guys, as promised, I wanted to get you the midweek analysis before midnight tonight. So, let's jump into it. Before I jump into it, though, let me give a disclaimer that this is not financial advice. Anything I share during this session is for educational purposes only. This is not financial advice. Thank you. All right, now that we've gotten that out the way, let's jump into the midweek technical analysis. Okay, so looking back to the pre-week analysis in the beginning of the week analysis, you guys know that I wanted to see the dollar open up bearish for the new trading week, right? And I drew your attention to consequent encroachment of Friday's wick and sell side liquidity from Friday's low, right? And I told you guys Monday that I expected us to at least pull down into consequent encroachment, and depending on how we reacted to that level, whether we respected it or whether we broke through it aggressively and closed below it, that would determine my confirmation for what price would do next. So as you can see, we broke below that consequent encroachment aggressively. If I take you down to the hour time frame, we see that here, right? I went over this in the beginning of the week analysis, how we came down, right? How we broke through it aggressively. And I also pointed out how clean we respected that consequent encroachment once we pulled back up to it. And I also informed you that it was because of that, how clean we respected that consequent encroachment level, that I was expecting price to pull down into the weekly PD array levels, which is outlined right here. The 62% weekly PD array and the 79% weekly PD array. Of course, we was expecting it to reach the first level first, of course, and then consequent encroachment of those two levels, right? And then lastly, that 79%, right? We got to be able to use some discretion and a little bit of common sense now that we're getting more into advanced technical analysis theories, right? So that being said, exactly what I wanted to see Monday played out. We came down, we ranked at 62%, right? We even came back up and retested that consequent encroachment. But as you can see, bodies still respected it, never breaking well, never closing above it, because we did break above it twice, but the bodies never closing above it, right? We came right back down through that 62% weekly PD array level and came down into the 50% mark between that 62 and 79% weekly PD array levels, right? So, and with um, with FOMC today, we see that we shot back up through that consequent encroachment aggressively, closing above it, retesting that weekly and daily buy side liquidity, running it really, right? I think we went over it by one tick because it's that 45.35 and the high is 40 I'm sorry, um 435, and the high we have here is 441. So yeah, we ran that weekly buy side liquidity, right? And then we see that we closed above it and prices continuing to push up. I told you guys that if and when price broke and closed above firstly this volume imbalance, right? This daily volume imbalance, right? I told you guys that when we broke and closed above that aggressively, that I expected the dollar to reach for the yearly high, right, at 105.892. Well, that's where I'm expecting price to reach for closing this trading week. I expect us to reach that level by the end of the week. Um, that's just my bias, and that's what I see. So, um, as you know, currency pairs, Euro, GBP, NZD, USD, they inversely correlate with DXY, the dollar. So, of course, if I was expecting the week to open up bearish for the dollar, then um, I was expecting us to open up bullish for currency pairs. In the same way, I was expecting us to pull down into the weekly PD arrays for the dollar. I was expecting us to pull up into the daily and weekly PD arrays for currencies. I didn't throw the weekly PD arrays on here because they're exactly the same as the dollar, so I didn't feel like doing all that overlapping. So we see that we pull back up into those PD arrays, and today with FOMC, we ran sell side liquidity um, from last week's price action, right? So looking at the pound, same thing for the pound, pulled up into that daily PD array. And with FOMC today, we ran that weekly sell side liquidity. Um, NZD USD, we pulled back up into the premium PD arrays, and we ran daily and weekly buy side liquidity. And today with FOMC, we see that retracement in price, right? So that looks good for currencies. Now with futures, of course, usually, right? Futures inversely correlate with the dollar as well, meaning they move in the opposite direction. So me being bearish the dollar to open up the week, of course I was bullish futures, right? And there was it was levels that I drew your attention to, right? This um first level here being this daily volume imbalance, right? I told you guys that I expected futures or ES, right, to open up bullish. And the first level that I expected us to reach for was that daily volume imbalance, right? Now, my overall bias for the week was to pull up into the daily and weekly premium arrays. But of course, like I said, we have to start using some common sense and discretion now that we're getting into advanced technical analysis theories, right? You have to be able to use a little common sense. You know that we're going to be reaching for our prices going to retest the daily volume imbalance first before it can get up to these levels. Obviously, if we cannot break and close above that daily volume imbalance, what does that tell you? That means that order flow is reversing and we're going in the opposite direction, right? And so once we seen price respect that volume imbalance, right, and we see price break down here, we run down into the daily volume imbalance to the downside. So we literally went from one daily volume imbalance to the up, right? And we know that we broke and closed below weekly and daily sell side liquidity. So what is that confirmation of? That price is showing you willingness to continue to the downside. And with FOMC today, we see that we just exploded through that daily volume imbalance to the downside. Um, and the same thing with NQ, right? We exploded through the daily volume imbalance to the downside as well. So going forward for the rest of the week, as I said, I'm expecting the dollar to continue to push higher to run its yearly highs. So therefore, I'm expecting futures to continue lower to run its monthly sell side liquidity from the previous month's price action, right? From August last month, sell side liquidity here. I'm expecting price to close the week reaching for that monthly sell side liquidity. Now, we could very well get price to reverse right from where we're at, right? And if that's the case, if we see the reversal pattern set up, we will look for price to run back up to retest this daily volume imbalance. And then we have to see how price reacts to that volume imbalance. If we break and close above it aggressively, if we break above it aggressively and close above it, then we will look for price to run higher. If we respect that level, right? If we reject it and we see reversal patterns to the downside, then we will go back to our monthly sell side liquidity target. Plain and simple. Less is more, keep it simple. Same thing with NQ. I expect us to run, I don't have the monthly sell side liquidity marked on here, but it should be this low right here. Matter of fact, let me go ahead and throw it on there for you guys. I already have my template set up. So monthly sell side liquidity. There we go. Boom, boom. And there you have it. So I don't really and truly looking at ES and NQ, I don't fully anticipate us or expect us to run these monthly sell side liquidities by the end of the week, right? It may take us getting into next week's price action before we actually run those lows. It just depends on, let me look at the Forex factory right quick, see if, how much more high impacting news drivers that we have this week. Okay, so we have unemployment claims. We have the Philly Fed manufacturing index tomorrow, right? Okay, so unemployment claims is a high impacting news driver, and the Philly Fed manufacturing index is a moderate impacting news driver. So we could see volatility out of the market for that. And Friday we have flash manufacturing PMI and flash services PMI. Okay, so we do have some fairly decent high impacting news drivers to close the week. So those news drivers could be enough to get us to those monthly sell side liquidities for ES and NQ. So that's what I'm looking for out of futures. For the rest of the week, out of currencies, I'm looking for bearish momentum as well. If I'm expecting the dollar to run its yearly highs, then of course I'm expecting currencies, um, in particular Euro USD, to run its yearly lows. I don't know if I have the yearly lows for GBP and NZD marked, which I don't. So you'll have to throw those levels on there yourself. Do your own work, pull your own troubles, as drinkers say. Pull your own trouble. So yeah, that's what I'm expecting out of currencies for the rest of the week and to close the week. So with that being said, I hope that this midweek analysis gave you guys some added perspective to your own weekly analysis and added some value to your trading journey. Um, I got a big day ahead of me tomorrow, so that's why I wasn't able to do the live class session tonight. I was resting. I was really tired today. And so, but I promised you guys that I would get you this before midnight tonight. And I always try to keep my word. So yeah, again, I hope this added some value to your life, to your trading journey, to your weekly analysis and whatnot. And as always, I appreciate you guys tuning in, coming out to get this knowledge and empower yourselves. If if these videos, if these sessions are adding some value to your life, please like, subscribe, and share. It really helps out a lot. And so, with that being said, let your family and friends know you love them while they're still here, please. And as always, peace and love, everybody. You know.